Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, December 1st, 2020. I am Frank Ochoa, aka PivotBoss. This is the first trading day of the month, and I do want to remind you that I will be hosting a monthly market outlook later on this afternoon at 4 o'clock p.m. Central Time, 5 p.m. Eastern. I will be discussing the futures market and also talking about stocks, different stocks here for both the short and medium term as we head into the end of the year and even into next year. We'll talk a little bit of seasonality and also take your request. I'll also discuss the upcoming PivotBoss Premium Bootcamp here, which will be next week, so you'll want to get more details about that as well. It is a free event. You can use the Zoom link below to join that webinar later on this afternoon. Again, the PivotBoss monthly market outlook for the month of December is tonight, or later on today at 4 p.m. Central. All right, let's take a look here at the ES. Number one, what you see here, again, because it is the first trading day of the month, you see we have new monthly pivots. That's the previous month's high right there. That's the vaccine high, the vaccine announcement high, the very first one. And then over here you have the close, which was yesterday's close. That's the previous month's close. Way down here is the previous month's low price. That was a sharp rejection off of that major sell-off in October. And then right there, first trading day of the month, this thing raced out to a strong start, perhaps on a buy the rumor, sell the news of the vaccine announcement. Now, what you're seeing over here is the midpoint of the previous month's range, and look how wide that pivot range is for the month. That would normally suggest that we may see some sort of range bound action this month, or at the very least this could become a target down here below if price rejects these two pivots. Anytime you have price close at the extreme of the month, there is the potential to see some sort of rejection of these days here, which would then in turn return you to the pivot range with a target that could be right here in the 3450 zone, which is the midpoint of the previous month's range. So right now, again, the early key level again continues to be that 3587 of a sign of weakness to come. Right now, overall, got to continue to watch the previous month's close price here and also the previous month's high. Any rejection at that level, even if it's a breakthrough, could lead to early push to begin the month. So again, this is going to be the zone to continue to watch here in the early part of the month. All right, let's take a look here at the NQ. Very similar discussion here. You can see the previous month's high here. Again, that's the vaccine announcement high, the initial vaccine announcement high. That's the previous month's close right there, and we are currently trading precisely between those two pivots. 49% of ADR right now, 89.75 points of range. It's been averaging 182 points per day on a 10-day basis and 190 on a 5-day basis. So we could see about another 100 points of range today, in addition to what we've already seen. Now, which way will it go? Again, typically speaking, when you have two pivots like this at the extreme, they can be rejected very quickly, and if it's rejected, especially in a zone that has tended to be rejected recently, there's a quick reversal that can happen right back to the midpoint of the previous month's range. That's about 11,670. So that's going to be an important target down below if price reacts here. Now again, we're right at that key range high. We're right at the key range high here. So this is a spot that we would normally watch for rejection anyways. So there is confluence up here of resistance. You can see the profile here. But if there is one of those big transitional days where we get a major price discovery phase higher and break through 12.6 and close near 12.8, that would be an indication that we are transitioning from this range to new higher markup trending structure. So right now those are the things to watch. But early on, keep an eye on this zone here for signs of rejection that could lead price back down early in the month. Let's take a look now at crude oil. You'll see here with crude oil, this one also closed at the extreme of the month's range. The midpoint is back near that special 40 level that has been a magnet for months. It has been a magnet. Anytime it gets too far away from it, it has snapped back to it. Even when price dropped below 34, the snapback was even faster. So no matter how far it's come back or gone above that level, it has tended to come right back to that level. Right now we are well beyond it, about as far below it or above it as we've been in a very long time. 46 is the high here off the 34 low. Again, if we were to snap back, that $40 level would be the target. And I know I mentioned before that this day was a transitional day. The midpoint's right at 44s. 44s was the breakout point. If price were to pull back here early in the month, it needs to be able to reestablish back above 44 to suggest that we're going to continue higher, because any failure to get back above that level could lead to that 40 retest. So again, have we snapped too far away from 40? Are we about to snap back? Those are things to consider. Now overall, we do have a very narrow range that has developed over the last 4 days, and that range right there is going to build the energy for the next move. So if we bring this over here down to a 4-day range, and this is a developing 4-day range because we're not done with it, click OK, and you'll see right here we're at 60% of ADR. You can see right there the magenta color, and we're looking at about 3.6 points of range, 3.6 points from a breakout. So if we do break, say, right here at 44.50 minus 3 points, you're trading somewhere in the 41 quarter zone, right? So somewhere in this zone. So that could be a very, very good target down below, and the same thing goes to the upside, because right now, given this trend, you see the PIMA trigger zone. So if price were to come below that 8-period average and begin to show signs of strength like this or like this, even on the day like that where it becomes the low, that could be an indication that we're about to bounce and go higher. So a few things to watch, but they all come to a head right at 44s. Alright, let's take a look lastly at gold futures. You'll see with gold futures here, we discussed how important it was for price to find a low somewhere in this zone, because if not, we could be headed another 100 handles downward towards 1650. We also discussed how in an uptrending 200-day, you tend to see a trap below it that could return it higher. Yesterday we discussed that any trap that would occur here could take us 100 handles higher. We were trading 1770 when I mentioned that yesterday, and I mentioned that the 1875 level would be about the target, 100 handles higher. And so far we've made a really good move toward that target already today. Yesterday was a day where it was feeling it out, finding a low. Today's already been a stop run day up and is already back above 1800. Now that doesn't mean we can't kind of mess around a little bit more, but this zone right here, 1780, 1778, that's going to want to be support over the next several days as this thing moves higher. So any push to or below that zone needs to be defended for a push higher. And if we're going to bounce back toward the previous month's midpoint, that means we're bouncing back toward the 1860s, and then 1870, that breakdown point, is just above. So again, that's that 100-point move we talked about yesterday. So far so good here, but we could still see a little bit of a pullback as deep as 1790 today, and that could still be bought for a continuation higher. Alright, that is it for now. Please join me later on for our free webinar event at 4 p.m. Central using the Zoom link below. Looking forward to seeing you soon. Alright everyone, take care, trade well, and I'll see you in the trading room.